Good morning, traders. It is Tuesday, March the 19th. Taking a look at the charts, we've got the DIA, the Dow Jones here, and what we're looking at, more or less, the market continues to grind its way up, but we are seeing the Dow. It's underperforming with a very bearish formation, and along with the Russell 2000. If you look at the Russell here, you can see it's doing very much the same thing. It's drifted up under the moving averages, under this previous pivot high. The Dow and the Russell seem to be on the verge of breaking down. With a three-wave correction, we'd see a big move down here that would really shake the market up. That's what we're looking for. But when we flip over to the SP 500, you can see it's been popping and pushing up to this nominal new high, breaking these previous highs, along with the Nasdaq. And we've been seeing Apple really push the market substantially higher with a very strong move. We're getting to this point here where hopefully things are extended this week to a point where we start to see a sharp correction. We are into some type of move where we should start to see a top form like these in the past. We don't know exactly when it's going to happen. Overall, we are getting overextended, or we have been overextended, and now we're at this point where we should start to see some type of pullback. And we'll have to see how things unfold. We might just have to get out of this play. I hate to ride this wall of worry up. Overall, if the other markets, the Dow and the Russell, weren't looking so bearish, I'd be out of here. But more or less, we're getting carried up by a few really big stocks, and the Dow and the Russell don't really have those. So it's kind of more or less the market's playing a game here, riding people up in certain indexes or sectors like the tech. Meanwhile, the other sectors, major indexes, are on the verge of a very significant pullback. So overall, this week, very pivotal. We're looking for a pullback, and I think it could be very sharp. I think we could get, a 3 or 4 day or one big day, a reversal type of day, and then if it consolidates for a couple of days, we could see the second half of a big correction that really shakes things up, and we see the VIX go into a spike. If we look at the VIX, you can see it's carrying right down today, trading lower again, right down to a really significant level that each time the VIX has gotten down to this level, we've seen a pop in the VIX, we've seen the market have a correction, and we're back down more or less at this average price level. So we'll see how things unfold. The put call ratio very low yesterday. It's opened at 55, which means everyone is bullish, and likely to do the same again today when there's no fear and everyone is buying calls in the market, which means a low put call ratio. We should see a pullback. And at this point, we'll see if we get one and how it performs. But overall, if we do get a pop in the VIX and the market to roll over, we will be looking to get out of our inverse trade in the Tech S, and to either reduce our loss or potentially see it move enough that we actually can make some money on it. But at this point, the market has kind of dragged a little further than we really wanted to, and it could be a kind of a best case scenario as we trim off any our losses a little bit versus make some money on that trade. That's just the way trading goes. Unfortunately, if we were in the Dow or the Russell, it'd be a different story, but we are not. Let's take a quick look over at the chart of bonds. Here's the daily chart of bonds. It's had a nice rally up here. It's been consolidating. This is the daily chart. Strong rally, consolidation. It is on the verge of a potential big rally continuation move to the upside, which means equities would be starting to sell off. Overall, it continues to trade sideways in this range, which we've talked about back here in January when we saw this pullback. We figured it would trade between this high and down in this low over here, which more or less it's traded. It's dipped through there one day, came back. But overall, there's a lot of fear still holding up money into bonds, and if this does have a continuation move, that means the equities market should be pulling back. Looking over at, let's take a quick look over at gold. Gold and silver both up about 0.5% this morning. Even though gold and silver actually traded slightly positive yesterday, we saw gold miners have a lot of downward pressure in the market. Still a bearish formation here on gold. If you look at silver, same type of thing. It's chopping around, stuck under the moving averages, stuck under these previous pivot lows. And if you look at the gold miners like GDX, you can see yesterday, pretty big down day yesterday. Overall today, we're going to see it gap up to more or less yesterday's opening price, so it is going to recoup some of that. But again, it is flirting with a very strong flush to the downside down to around this 21 area, potentially lower depending on how much fear hits the market. I know it's extremely bullish sentiment in gold and miners, so for that to unwind, we usually see a sharp pullback. If we go take a look over at natural gas, you can see here natural gas, it's been holding its ground. We were looking for a move down into this 270 area. Looks like it's coming right up here, testing this recent high of this 290 area. If it breaks here, we might get that run to 3. We probably get that run to 3. We have an upside target of 315. Overall, it has formed this little bit of a rounding formation and a really long handle, or you could argue it's a long bull flag working itself out. But overall, we wanted to see a flush down. We want to break this pivot low, get down into this 270 area for a long position. At this point, it's starting to pop and run higher. Very much so like crude oil. Crude oil formed this handle, broke into this handle, has been just working its way up. The next resistance level is around this 62 level, this blue line here, where we continue to see it kind of grind its way up and a nice 45-degree angle. Overall, it's probably going to continue to get into this area until we see the dollar have some type of correction and put some downward pressure on crude oil. Now, if we look at the U.S. dollar index, let's just zoom out a little bit here. You can see we got this sloping trend line, more or less these lows here. More or less it's channeling on its way up. We've got a channel on the upside. It's ping-ponging around. We'll see if we can get some traction. Dollar is trading a little bit lower today, which is why we're seeing metals move a bit higher. But if it can find some traction, just like it has in the past year where it gets down to these pivot lows, this could be where we start to see the dollar take off and we see that leg down in gold. If this does start to break to the downside, the next target will be somewhere down here, which would send gold and miners sharply higher. So this is a really critical point, critical time in the market this week, and with different indexes and price ranges for the dollar of what things are going to do. Anyways, that's it for this morning. I'll talk to you in a little bit. Bye-bye.